Good evening, everybody. Hope everybody's having a nice, well, this is well into the fall, isn't it? All right. Well, tonight we've got the great privilege of having StevePrimo with us. He's going to show us his techniques for trading because he's got a very well established background. He was actually a floor reporter and runner for the Pacific Stock Exchange, and he went into being a specialist on the exchange for Donaldson Lufkin back then. And as a specialist, he was in charge of markets or making markets for over 50 stocks. So that gives you, obviously, the ground floor insights on what makes prices move. Since then, he has developed his own proprietary method of trading. So we're very anxious to see what his system is. Steve, welcome to the Candlestick Forum. We're anxious to see what you got.
Thank you, Steve, and thank you, everyone, for inviting me and attending today and hearing me speak. Welcome to this presentation where I'm going to be talking about the three main components of a successful strategy. All right, so you can start using and applying these as early as tomorrow, and you can do anything you'd like. You can take one of them and add them to your already current strategy, or you can actually put together and make a strategy based off of these. Once again, my name is StevePrimo. I'm the president and founder of Specialist Trading. And for those of you unfamiliar with my website, we are first and foremost an educational company. Even though we provide all of our members and students with strategies and techniques that I've accumulated in my 37 years of trading, we are more about teaching you these things so that you can empower yourself and make your own trading decisions. It's our intention to really give you sound knowledge that has stood the test of time, because we feel that too many traders are ultimately failing today because they're relying on outside sources to tell them what to do. So at Specialist Trading, we take all of the information I've accumulated and help devise and put together a plan that's perfect for you. You can either use one of our strategies, or we can help you put together something that meets your needs. So before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of examples using these three key elements and components, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view the disclaimer. And also, before we begin, I'd like to invite each and every one of you to follow us, join us on Twitter. That's our handle right there, abbreviation for Specialist Trading. It's at SPCLSTTRADG. We post a lot of great free information there on a daily basis, anywhere from financial wisdom to current signals that we're in. And not just signals in the stock market, we also follow currency pairs. We were long the Swiss franc a few days ago. We told all of our members, and we posted it on Twitter, that we were long. I had multiple signals to go along the Swiss franc. We also post them in stocks as well as the market. We've had a number of signals posted in the market as of late, so feel free to join us there at Twitter. Now, I just want to take a few seconds to go over the philosophy of Specialist Trading, because as Steve said, yes, I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. And I traded through just about every market environment imaginable. I traded in the crash of 1987. I traded through the great bull market that followed after that. And I left in the mid-90s to manage money and also to pursue my own trading account. I trade just about every market there is imaginable these days, in and out of currency pairs, stocks, E-mini futures. And I know a lot of you will say, well, Steve, it's easy for you to be successful or consistent because you had information privy to no one else on the floor and you were able to see things. Well, that's not true. I always tell all of my students and members at Specialist Trading that for the first couple of years in my career, I struggled tremendously. In fact, I was trading probably the way 99.9% of all traders trade. I was having maybe 3 or 4 great trades, and then my 5th trade, I would give everything back. And by the end of the month, in fact, by the end of the year, I had nothing to show for all my hard work and research. I was reading all the books, going to all the seminars, and I just couldn't make ends meet. And I know a lot of you are probably going through that as well. It's extremely discouraging, very frustrating, because you put a lot of hard work into trying to be successful, and then ultimately it fails and it doesn't work. So I finally got in touch with my mentors. These were specialists on the floor who'd been trading 30, 40 years. And they basically told me that, Steve, your trading is too complicated. You overcomplicated your trading. And in fact, they were right. I had about 10, 20 indicators on my screen. I was following far too many things, too many news events, too many trading gurus, listening to what they were saying. And I was relying on outside sources to tell me what to do. And when in fact, I wasn't a part of the process. So what my mentors taught me was, they said, Steve, simplify things as best you can, and release a lot of that stuff that is supposed to work conventional wisdom, because most of it doesn't work. And that's what will get you on that road to consistency. So once I started doing that, I started paying less attention to the news. I started paying less attention to a ton of indicators and going from 10 or 20 rules in my strategy to maybe only 4 or 5. That's when I started to become consistent. So this is what we teach all of our members. We try to teach them how to trade with the specialist edge. My goal is to teach you how to trade with that edge, not to trade for you, not to give you signals so that you can just blindly take them, but to teach you so that you can empower yourself and make your own trading decisions. Okay, so that's the philosophy behind specialist trading. We are first and foremost an educational company. All right, so if we're an educational company, here's what you're going to learn today. I'm going to share with you edge number 1, how to trade in sync. I know everyone has thought, well, sure, we've all been taught that at the very beginning you have to trade in sync. Well, I'm going to share with you what I think is the easiest and most powerful way to be in sync with whatever market you're looking at. Edge number 2 is going to be a price bar pattern. We're going to look for the specific price bar pattern so that you can find this that will give you a really strong, high probability setup. And then we're also going to tell you how to fine-tune your entries. A lot of traders lose today, not because they have the wrong idea, but because their entry is faulty. You can start using this entry technique as early as tomorrow if you like, and you can apply it to anything you're currently trading with. And then we're going to put all of these 3 components together, and I'm going to share with you a pullback technique. All right? This is just a technique, though. It's not a strategy. It's not a system. It's just a technique for looking for high probability pullback trades. Okay? Now, one last thing before we begin. I know we only have about 15 minutes or so left. The presentation seems to run a lot smoother if we wait till the very end to ask questions. So please, if you have any questions, just wait till the very end, and I promise I'll answer them in the last 10 or 20 minutes. Okay? So I'll go through this, and many times if you simply wait, you'll see that your question is answered in the next slide. All right, so let's begin. If we want to look for buys, for buy setups, here's component number 1. All right? Obviously, you must trade in sync with the trend. Everyone knows this. Well, then why isn't everyone or more people successful? Upwards of 80 to 90% of all traders ultimately lose. We feel the reason is because everyone has a different idea of what the trend is or how to be in sync with the trend. Anywhere from tons of indicators to what the news is, to higher highs, lower lows, to candlestick formations. I know there's a ton of them, and each of them are okay in their right sense. But we have something that's actually, we believe, simpler and more powerful. If we look at this generic chart here, someone just looking at this would say, well, Steve, there actually is no trend here. We're just kind of going sideways. So we're going lower, we're going back up, and then back down. So we're just in a range. But this is how we determine trend at specialist trading, regardless of what time frame we're in. We simply add a 50-period simple moving average. And we ask ourselves, where is price in relation to that? If price is above the way it is here in this scenario, well, then the overall trend is up. That means we're only looking for buy setups. Okay? It's that simple. That's all you have to do. And it doesn't matter if you trade only 5-minute bars of the E-mini or if you trade monthly bars of the Euro-dollar. It doesn't matter. Always have a 50-period moving average plotted and just ask yourself, where is price in relation to that? If price is below, then you're only going to be looking for sell setups because the overall trend is down. But in this case, the overall trend is up. All right, that was simple enough. How about component number 2? We want to look for a bar that closes in the top 25% of its range. Since we're looking for buy setups, find a bar that closes in the top 25% of its range. And why is that? Because when a bar closes near or at the top of its range, regardless of what time frame, it's a clue coming from the market itself, not from some guy on TV or someone in a chat room, but from the market telling you that most likely it's going to continue in that direction. So what a great edge to have, what a great clue to have from the market itself. So if we look at that same generic slide again, we see that we're above the 50 period, and we have these 2 bars here that close in the top 50% of the range, okay? Or top 25%, I should say. All right, so now we find those bars. Now we look for component number 3, and this is an entry technique. We want to enter upon the confirmation of trend. What does that mean? I'm sure a lot of you are saying, well, I thought we already found out what the trend was. The overall trend is up. Well, here's what we mean. This is the confirmation method, and you may want to write this down. What this means is we want to buy, and we want to buy on the next bar only if price trades 1 to 5 ticks above the bar that closed in the top 25% of its range. Okay, and when we say top 25%, once again, it doesn't matter if you're looking at standard open, high, low, close bars or candlesticks. The range is simply the very high of that bar, not the open and close, but the very high of the wick and the very low. Okay, that's the range. The range is not from open to close. That's just the body range. We're looking at the very high and the very low, all right, regardless of what time frame you're looking at. If you close in the top 25% of that, the top quarter, all right, we want to buy if we trade above that. Not if we close above that, but if we trade above that on the next bar and the next bar only. All right, so let's go back to that scenario once again. These are the two bars in green here that close in the top 25%. And we see that's where you want to buy in this first scenario. And it went up a little bit after you went and entered. Once it traded above, you see how price went up above. Now, it doesn't matter if price closes above, as we see here. All we want to make sure is that once we trade above, we are buying. And in this case, we close lower, but that's okay. Remember, the market is giving you a clue that most likely it wants to go higher. Now we have a second scenario here, okay? So we want to buy if we trade 1 to 5 ticks above. Obviously, if these were currency pairs, it would be 1 to 5 pips above. So that's where we enter, and once again we entered and we closed lower. It does not matter where we close, just as long as intra-bar we traded above there. So you could have a buy stop, or you could, if you were in front of your computer all day, you could simply enter at the market. And once we enter, look what happens. So you see, we didn't care about news, we didn't care about any informations, we didn't care about what's going on in the world. All we know is that we're in sync with the trend and we're listening to the market. That's all we're doing. That's how simple trading can be. All right, let's just reverse this now for sells. Let's go real quickly through a sell scenario. Component number one, we want to be in sync with the trend, obviously. But in this case, as we see here, we look like we are in absolutely no trend. We're going down and then back up. Well, that's not the way we discern what the trend is. The way we find out is by adding the 50-period simple moving average. Ask ourselves, where is price in relation to that? Price is below. So the overall trend in this case is down. And once again, it does not matter if this is a 5-minute chart, a monthly, weekly, or daily chart. It's going to always be the same. All right, component number two, we look for a bar that closes in the bottom 25% range of its range. Now remember, we're just looking for the extreme high and extreme low of that day or of that bar. Maybe the bar is a weekly bar, maybe it's a 10-minute bar. But whatever the extreme high is and the extreme low, we divide it by 4, and if it closes in the bottom 25% of its range, well, that's what we're looking for. As we see the scenario we're looking at, we're below the 50 period, and we have this bar closing in the bottom 25% of its range. So now we simply add the third component, which is the confirmation method. We want to enter a confirmation. And confirmation, once again, is just we're selling on the next bar only if price trades 1 to 5 ticks or 1 to 5 pips below the bar that closed in the bottom 25% of its range. So we see that bar closed in the bottom quarter of its range, and if we trade below it, right here, if we trade 1 to 5 ticks below it, we don't have to close below there. We just intra-bar trade below it. That's where we're going to enter. And as you can see, it did trade below the very next day and then closed higher. It's okay. We don't care. So we are in the trade. We are short, and look what happens. Remember, once again, you will get the greatest signals and the greatest information and the greatest edges from the market itself if you only know how to listen to it. And it's extremely simple. The market is simply telling us what it most likely wants to do, and all we do is jump on board. It's that simple. We're not trying to pick a top. We're not trying to pick a bottom. We're not telling whatever market what we're trading what it's going to do. We're simply listening to it and jumping on board, as we did in this case right here. All right, so let's look at a pullback technique. Let's put all these three together and let's devise some type of pullback technique. But please, once again, this is not in any way a strategy. It's not a system. It's just a technique that you can build a strategy or system off of if you'd like. But this is not something that comes with stop loss. It doesn't come with exit rules. It doesn't come with money management or how many shares or how many contracts to trade. It's simply a technique. It's a foundation for building a strategy off of. But it's a very good foundation. All right, here's what you want to do. You may want to write this down. We want to see price pull back towards the 50-period moving average. The closer the better. So if price is above, we want to see it sell off or pull back close to the 50-period moving average. All right. Once we see that it's sold off towards there, we want to buy when we find a bar that closes in the top 25% of its range. And we want to sell those bars that close in the bottom 25% of their range if it's below the 50-period moving average. Okay? And then we're going to apply our entry technique we just shared with you. But we want to see price pull back or sell off a little bit if we're above the 50, and we want to see price rise and pull back to the upside if we are below the 50. All right, so let's look at some stock examples first. All right, this is an older chart of Apple, and later on we'll get to charts that are very current as of this last week. But here's an older chart of Apple. As we can see, we are above the 50-period moving average, so we're only looking for buy setups. We are in no way going to consider shorting Apple. All right, we wait for it to pull back. There are no real bars that close in the top 25% until we get to this bar right here. Do you see? Even though we intra-bar went below the 50, that's okay. As long as we close above that 50, that's our setup bar, all right? That's the bar that we want to use for entry. Now, we're going to enter if we trade 1 to 5 ticks above because it's pulled back as close as it can to the 50. In fact, it's touching. And we want to buy on the next bar only if it trades 1 to 5 ticks above. And we bought here on the 11th of August a couple of months ago, and look what happened, okay? Once again, we're not concerned with news. We're not concerned with what's going on in the world. We just listen to what the market is telling us. All right, so we can use and apply the same technique to CVX. We are, in this case, below the 50-period moving average. So what does this mean? It means that we're only looking for sell setups for a pullback to the upside. Price rises, as you can see, price rises towards the 50-period moving average. And then we create a bar here that closes in its bottom 25%. Okay, so that means that we can go short if we trade below this bar, but we can only go short if we trade below it 1 to 5 ticks on the next bar. Well, we never did, as you can see. But guess what? The very next bar also closed in the bottom 25%. So we can still apply all of the rules to this bar. All right, so we simply wait to see if we close below this. Now, if it doesn't close below this, well, we'll wait and see if the next bar is applicable. But we actually did close, or I should say trade below it, so you would have gotten short on the 4th of September, about a month or so ago, and look what happened, okay? All right, let's look at the next setup here. This is in DUK. Duck, as you can see, not much of a pullback, but we are above the 50-period moving average, and price has sold off, and we're getting close to the 50-period moving average, okay? As you can see now, we have a couple of bars that actually did close in the top 25% of their range, but we never traded above them, all right? Here's another one that closed in the top 25%, as you can see, but we never closed above that one. But then the very next bar closed at the very high of the day, so that's also a valid setup. We can go long if we traded above there on the next day, and you would have purchased on the 30th, roughly about 74, and look what happened, okay? How about this next example that we have here in COG? As you can see, we are below the 50-period moving average, so this tells us we're only looking for sell setups. Price heads lower, but then starts to rise, and now we touch the 50, so this is good, and we're looking for bars that close in the bottom 25%. This bar came close to, but it really didn't meet the requirements, but this bar does close towards the bottom portion, all right? So this is your setup bar, and it means we're going to go short if we trade, not close, but trade below that on the next day. As you can see, we opened below, so you would have gotten short just about 3 weeks ago, roughly about 31.5, and look what happened after that. Here's another example for us all. This one is above the 50 in HAS. As you can see, price is above, and we want to see price begin to sell off and begin to pull back. And as it's selling off, we look for a bar that closes in the top 25%. None of these bars are closing in the top. They're actually closing in the very bottom, except this bar right here. We went below and then closed in the top portion of its range. So this is a valid setup, meaning that we can go long if we trade 1 to 5 ticks above this in the next day. So we entered the next day on the 17th, and look what happened. In one day, you had a really nice move to the upside. Here's another example in the diamonds. This is how you see this works in virtually anything. This is an ETF on the Dow Jones Industrial Average. And this was an older chart, but I want to share with you how this technique, remember, if you don't get filled on the next day, you have to continue tracking. As long as all the conditions are still in place, you continue to track the trade. For example, as we can see right here, we didn't get filled on this trade, but guess what? The next trade is also a setup. So if we trade anywhere above here on the diamonds, we'll go long. So it has to be on the very next bar, and we never traded above there. So see, this technique for entry is great because it keeps you out of losing trades many times. Some people would simply buy at the market. Well, many times you'll buy at the market and it goes the opposite direction. So we want confirmation. That's why this entry technique is called the confirmation technique, meaning that it has to confirm that it's going higher by trading 1 to 5 ticks above the previous bar. Now we no longer have any more setups because this bar did not close in the top 25%. So we're out of the market. We're not looking for anything. So we simply avoid this day until the very next day. Guess what? We have another bar that closed in the top 25%. So we have a setup to go long again. So we could have entered the next day on the 16th, and look what happened to the market. 3 days, you had a really nice run-up in the down. Now, you could have used this just as a marketing technique to tell you when you want to be long, as a directional technique for the market. So you didn't have to actually buy the diamonds. You could have actually just purchased stocks that make up the Dow Jones Industrial if you want. Here's another example if we want to apply this. This is in the spiders, and it's just to show you how this works in any direction in any ETF. This was just this month. As you can see, we are below the 50-period simple moving average. We were kind of oscillating above and below, but we are below. And then we snap back and pull back. This bar really didn't close in the bottom 25%, but I believe this one did. So this is our setup bar. If we trade 1 to 5 ticks below that on the next day, we can go short. So this is where we want to enter a stop sell, or we can just simply watch it. So the next day, guess what? We went below it intra-bar, but look at that rally. Okay, well, we had a nice rally. But if we're still holding on to this and we still feel that this technique is going to work, you would still trust in this method, and it would have been a good thing if you did, because the market kicked back into the momentum the next day. Now we look again here, we can see this at the crude oil. This is a chart of crude oil, because people say, well, Steve, doesn't this work on commodities as well? Yes, it does. As you see here, we had a really nice bounce up to the 50-period moving average. In fact, it closed above, but the very next day, we closed in the bottom 25%. So this is a perfect setup to go short crude oil, and this was just at the very beginning of October. So if we traded below this on the next daily bar of crude oil, that was your signal to enter into the market. You could have gone short on the very 1st of October, and we all know what crude oil has been doing. Remember, we're not looking or listening to what's going on in the world with news, with oil. We don't care. The market tells us if it's going higher or lower. All right, so that was the daily bars of stocks. Let's look at the E-mini S&P. Now, we'll start with different time frames for this. Let's look and start off first with a weekly chart. Here's a weekly chart of the E-mini. As you can see, we are well above the 50 period, and this is a standard chart up until, I believe, this day. I took the snapshot today. Now, we're going up, so this means we're looking for bars that are selling off towards the 50, and we have a couple of bars right here, and they both closed in the top 25% of their range. So if you wanted to use this as a directional tool, or you could have actually used this to trade, you could have purchased the futures, or you could have bought options on this, or just use this as a directional tool, you could have seen that you would have entered to buy both of these, once in February and another one in August the 15th. And they both had really nice run-ups ever since that. Now, here's the important news. Now, even though we haven't finished the week, the far right-hand bar is setting up for another buy. Why? Because we have pulled back. This is what's happened this last month or so. And this is today's bar, but this is a weekly bar. So we have to wait and see how this closes tomorrow. Now, if we have a large sell-off tomorrow, well, then perhaps this bar will close down here, and this is no longer a valid setup for this pullback technique. But let's say we close anywhere in this top range here. Well, you know, if we trade above, this is the market telling you most likely it wants to go higher. So this is something to watch just off of this technique. Now we can also go to a different time frame. Here we have a 60-minute time frame, and we were originally below the 50-period simple moving average. Then we oscillated and bounced above it, but then we bounce right back below it. So this could have been presumed as some type of a pullback. We are now below the 50s. It's a little bit more advanced trade, but as you can see, this is a valid setup bar, and this was just, I believe this on the 9th, so this was just a couple of weeks ago on an hourly chart. So you could have used this to gone short. This is before the market really started to fall out of bed, and that's where your entry would be to go short the E-mini on an hourly time frame. You would have sold on the 9th, and we all know what happened this last couple of weeks on the futures markets and on the market. Once again, we don't care what's going on with news. We don't care what's happening with someone saying in some chat room. We're only looking at the market, and it tells you these things all the time. All right, we can go to a different time frame. All right, let's look now at a 5-minute time frame, and this was, I believe, on the 20th, so this was this Monday. Now, obviously, we are above the 50-period simple moving average, so we're just looking for buy setups. All right, so we have a really nice sell-off right here. That's a really nice pullback to the 50-period moving average. And guess what? We have a couple of bars that close in the top 25%. So that could have been your entry point on Monday to go long the E-mini up until the close. You could have stayed long to the close if you want. Remember, you still need structure. You need exit and stop rules, but you just see how simple it is to trade when you're in sync with the market and you're listening to the market telling you when to get in. Now that's off a 5-minute chart. Here is a chart from actually today, as you can see down here. This is on the 23rd. I took the snapshot this morning. We gapped up on the E-mini, and this is on a, I believe, a tick chart. This was on a 1500 tick chart, okay? So what we did was we gapped up and we started to pull back. Once we got close to this 50 period, we looked for those bars that close in the top 25% of their range. In fact, we had a couple of scenarios here and here. So 2 bars that close in the top 25% of their range, even if it's a tick chart, doesn't matter, follows the same scenario, the same conditions, and you could have purchased right there. This was in the first hour, 2 hours of today's trading. And then lastly, you can apply this to the Forex markets. It does not matter whatever we're trading. We can be trading stocks, we can trade E-minis, we can trade Forex. It does not matter anything other than just market. So here's the Forex market. Let's start off now with this, I believe this is an older chart in the Swiss franc. We are above the 50-period simple moving average. So this means we're only looking for buy setups. We're in no way going to think about shorting the Swiss franc, okay? Now, we don't really have a real strong sell-off or pullback, but that's okay. Price is selling off a little bit, and we want to find that chart and that bar chart that closes in the top quarter. So that's this bar right here. We close in the top quarter. So this means if we trade 1 to 5 pips on the very next bar, we can go long. As you can see here, this was on the 19th of August. We could have purchased the Swiss franc, and look what's happened ever since. Now, if we want to look at another time frame, another chart, we can look at the Australian dollar. This is in September. We're kind of oscillating up and down once again. This is a little bit more advanced trade. We're below the 50 period, and we start to bounce. So this could be construed as the pullback, but now once again, we sell off below the 50. So if you're a little bit more advanced, you could use this as our bar that we are going to have a setup to go short. But we have to trade 1 to 5 pips below that on the very next bar, and you would have. You would have gone short on the 9th, the Australian dollar, and look what happened after that, okay? That was a daily bar. Now we can look at a weekly bar of the dollar yen, and we see the same scenarios happening no matter what time frame, no matter what market. We pulled back to the 50 period. We had a bar that closed in the top quarter of its range, but it didn't trade above there the next day. So we have no setup until this day right here, or this week I should say. We closed in the top 25%. So you could have entered on the next day, the 1st of August, and look at the moves you could have had. All right? Remember, I struggled for years until my mentors taught me these concepts. I couldn't get on that road to consistency. I was overcomplicating my trading. Everything had to line up just perfectly. I had to make sure that the news was in line. I had to make sure that the risk-reward ratio fit perfectly. I had to make sure that I had the right formation. I had to make sure that you know, what they were saying in the chat room was working. It just was so complicated. And my mentor said, Steve, just drop all that stuff. There's no way anyone can make any money with all these rules and regulations. Simplify your trading. And I said, well, how do I do that? And they taught me how to listen to the market. And these 3 components are some of the most powerful components you'll ever need. Price above the 50, and then looking for bars that close either in the top or 25% of the range, or the bottom if it's below the 50. And then lastly, using that confirmation technique, not just simply buying at the market the way most people do or placing a limit lower. Wait for price to trade above. It's okay, you're going to pay a little bit higher, but at least you'll have the confirmation that most likely it's going to continue. So these are all great techniques, and I really feel that they'll elevate your trading to the next level. So let's recap. Edge number one. The best way and most powerful way we know of being in sync with the market is by applying the 50-period simple moving average. I know a lot of people say, well, Steve, I trade weekly bars, or Steve, I trade 5-minute bars. It doesn't matter. So do I. And I only have the 50-period plotted. That's all. If price is above, I only look for buy setups. That's it. If price is below, I only look for sell setups. Now, in fact, I have a homework assignment for you. Go back and look at your last 10 or 20 trades. And I can almost guarantee that the trades you had that were losers are because you were out of sync with this simple trend rule. In other words, you were buying below the 50 and selling above. So every once in a while that will work. Like I said, when I was on the floor, I used to trade tops and bottoms, and I used to try and pick the top and pick the bottom, and it would work great until it didn't work, and then I gave everything back I made in the last 4 or 5 trades. So it's much easier just to be in sync with the trend by applying this 50. And so what? Every once in a while you might miss a perfect top, or you might miss a perfect bottom. That's okay. We're not aiming for home runs. We're looking for consistency, because consistency is what's going to keep you trading 20, 30, 40 years from now, okay? Not home runs. I worked on the floor, as I said, and I saw tons of traders on the floor who made home runs. They made hundreds of thousands, if not millions of dollars in a relatively short time. They hit tremendous home runs picking tops and picking bottoms. But guess what? Not one of those traders is trading anymore. They've been wiped out. Because if you trade that way, you can almost, I'm not going to guarantee, certainly, say that most likely you're also going to lose it as well. So it's much easier to have a technique that is 2 steps forward, 1 step back. That will give you consistency, and that will keep you in the game for the long run. Next, edge number 2, we want to look for that bar pattern. If we're above the 50 period, we want to look for a bar that closes in the top 25% of its range. Why? Because the market is telling you, I mean, what a better source to get information from? The market. Whatever market you're trading is telling you that most likely it's going to continue in that direction. So isn't that a great edge? I mean, we hear people on TV and in chat rooms and on websites telling you all the time what they think is going to happen. How about just listening to the market? It's a lot cheaper and a lot easier to learn. If price is below the 50, we look for bars that close in the bottom 25% of their range. And then lastly, once we find these bars, let's only enter if price trades 1 to 5 ticks above. Okay? So we don't want to buy at the market, because sometimes, as I just showed you in some examples, it doesn't continue. We still have a bar that closes in the top 25, but then it goes lower for the next 2 or 3 bars. So we don't want to hold on to losing trades. We want to get in when the train is leaving the station. Okay? So most traders get in when the train is entering the station but going the wrong way. All right? It's going in the opposite direction. Well, it's not going to stop and turn around. So wait for the train that's going in your direction and then jump on board. That's what the confirmation technique is about. All right? And then we put them all together, and we put together a technique for you, a pullback technique. Now, please remember, this is not, I repeat, it is not a system or a strategy. So I know a lot of you are probably going to ask me questions in the next 5 minutes. Well, Steve, where do I put my stop? Or where do I place my, my exit order? Or where do I move my stop up? Remember, those are all pieces of the puzzle that come with a strategy or a system. I just gave you a technique, a great guideline or formation for constructing a strategy or a system. But it does not come with all of those pieces of the puzzle. So at this point, this is just a pullback technique that, as an educational tool, I want you to put together. Now, ask yourself, in closing here, before we go to questions and answers, ask yourself, do you think any one of these edges I just gave you, either the 50-period simple moving average, the way we use that, or how about the bar in the top 25 or lower 25% of its range, or how about the confirmation technique, do you think any of them could have helped your trading this past year? I mean, be honest. Even if you just use the 50-period moving average and you look back at your last 10 or 20 trades, do you think they could have helped by only taking buy signals above the 50 or buy signals below the 50, or sell signals below the 50, regardless of what strategy you're trading? Well, remember, this was not a full-fledged strategy. It was only an edge, 3 edges that formalized some type of pullback technique. But what if I could give you a full-fledged pullback strategy? In fact, one of our best strategies for trading pullbacks in any market and in any time frame. If I could just spend the last 5 minutes talking about our promotion here, this is our Secrets of a Stock Exchange Specialist training session. 2 years ago, I was asked to speak in front of a crowd in Denver, Colorado at a seminar, all right? And lots of people came to pay good money to see me speak. I spoke for 3 hours, and we recorded the event. And so this is what this is. This is a 3-hour video online course training sessions where I give you a lot of great free information, more edges such as the edges I just shared with you. But I think the best thing about this is that I give you all the rules, the entry, stop placement, money management, as well as exit rules to probably one of our most consistent strategies for trading pullbacks in any market, and that's strategy number 1. In fact, let me just show you a couple of recent signals applying strategy number 1. As we see here, we had some great signals in, let me just close this window real quick. In Twitter, as you can see, we had a nice sell-off all the way down to the 18th of September. And in that sell-off, a lot of people are probably thinking, well, that's it, it's topped out. But strategy number 1 generated a buy signal. And look at the nice move you had after that. And then we had another sell-off, which was discerned as a pullback by the strategy on the 1st of October. And look at the nice move you had after that. So that's one signal that was generated. If we look at, again, we see we had another signal in FAST, all right? We generated a short signal on the 6th. As you can see, we had a really nice pullback to the upside. A lot of people thought, well, hey, this is stopping. Maybe it's time to go long. But strategy number 1 generated a sell signal, and look what happened after that, okay? It's almost uncanny the way it picks these tops or bottoms. Now, a lot of people will say, well, Steve, I thought you don't pick tops or bottoms. We don't. We only pick tops or bottoms within the trend. So in other words, a pullback is simply buying within a trend, a bottom within a trend, or selling a top within a trend. Other examples, ROSTs. You can see here we had 3 really nice signals on the 24th of September, another one on the 7th, and another one on the 16th of October. And you see how just almost uncannily we picked the bottoms on all of those sell-offs. Here's Netflix. You see here on the 7th and 9th of October. A lot of people were thinking, well, okay, we've kind of bounced and we're looking to go higher. But strategy number 1 discerned that these were just simply pullbacks in a downward market. So we gave you a sell signal here, accompanied by another one. And look what happened. Before, I know that there was probably some news that came out or something. We really don't care. It wasn't as if the company Netflix called up Specialist Trading and called me up one night and said, hey, why don't you get all of your members to go short, because we're going to release some information next week that's going to be really negative, and so they can get a really nice trade out of this. No one told us whatever it is that made this stock gap down like this. Only one thing told us to get short. That was the market. So strategy number 1 has a really uncanny way of spotting and listening to the market and then just jumping on board with whatever the market's telling you. Now, these, as you can see, were downward moves. In Costco, we had a really nice upward move in August. 2 bottoms that were picked on the 5th of August, again on the 13th. And you could have ridden it up all the way as high as you want. And we teach you how to do that, how to extend your gains in the course. You can also apply this to ETFs. Here's QQQs. As you can see, these are all buy signals going all the way back to July. All right. Once again, you do not have to trade the QQQs or any ETFs. You can, whatever makes up that market, you can simply say, well, if I'm getting a buy signal in QQQs, let me look for a buy signal in whatever makes up that particular indice. And then heating oil. It also works on commodities. In fact, we have some people that only trade commodities. They trade bonds, they trade heating oil, they trade anything else, gold or silver, just simply using strategy number 1. And look at all the nice sell signals that were generated on all of these pullbacks. Now, these are all daily bars. Here's a 60-minute chart of the E-mini. And look at all the pullbacks that were captured in September, coming up until the end of September when we had that really nice sell-off. This was a 60-minute chart in the E-mini. If we want to look at a 15-minute chart, well, this was just this past week. This was, I believe, on the 16th and the 17th when we had a really nice run-up on a 15-minute chart. If you wanted to hold a position overnight, well, you could have purchased on this particular day and just held it off of the signal, or you could have waited for this signal. Okay? And then if we go to the next chart, we can see that these signals were actually taken yesterday. I took these yesterday on a 2,000 tick chart. They were, when we had that sell-off during the day, we had some really nice pullback sell-offs just using strategy number 1. Now remember, these are the same rules for each and every one of these markets. Nothing is changed if we trade the Canadian dollar, as you see here, on a daily time frame, or if we trade the E-mini on a 2000 tick bar chart. We're going to use the same rules, we're going to use the same setup, and probably, I believe, only about 5 rules altogether. So this is all included along with about 10 more edges, just like the ones I shared with you today. All right. On top of that, you also get access to my email address. You can contact me anytime you'd like. Now, we have this selling on our website, which markets and promotes everything at Specialist Trading. That's Pro Trader Strategies. And we sell this because of the strategy and all the rules. This is sold for close to $1,000. But because of our affiliation with Steve Bigelow and because we've done webinars and cross webinars with them before, we're dropping the price down to $37. So that's all you have to pay, $37. In fact, I'm sure most of you may have spent more than that trading today with commissions or maybe some small losses. $37 is not a lot to pay for all this valuable information. We'll give you much more edges, such as the ones I shared with you today. I tell you which indicators to use and which ones not to use. We go into the definition of the difference between system versus a strategy. I share with you my #1 chart pattern, how to be on the right side of the market, and I think the most important to all of these things which I share in this three-hour video are the complete rules to strategy #1. I just shared with you some of the current signals that our course members took using strategy #1. Remember, it does not matter if you trade the currency pairs or if you trade, tick charts for the E-mini, or if you trade daily bars on stocks. This strategy can be applied to all of those markets and has a very high level of consistency. So all of this comes with access to my email address. You can contact me whenever you like. In fact, just before I started this presentation, about 10 minutes before, I was answering emails from a lot of our members. So I'm constantly trying to get in touch with people. Just as we said, we are an educational company, so we're more about teaching you than just simply throwing you to the wolves and giving you this information and saying goodbye. So $37 is a great deal, once again, because of our affiliation with the Candlestick Trading Forum with Steve. So if you're interested, here's how to sign up and get the $37 package for a limited time. Remember, our sister site is Pro Trader Strategies. They market and promote all of my individual courses and techniques. So you can contact any one of their trading consultants by emailing them at trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677. Now, if you just want to sign up for that $37 deal and get it right away, I mean, it's an online course, so it's your video for life. It's not something that is only good for 2 or 3 weeks. Once you get the online video, the link to the video, it's yours. You can look at it at your leisure whenever you'd like. If you want to just immediately sign up for that $37 limited time offer, there's the link at the very bottom. Just copy that and paste it onto your browser. I'll leave this screen up here so you can copy that, and you'll be able to just immediately access that $37 deal, and you can be looking at the video in about 10 minutes from now. So once again, for $37, I don't think you can beat that. If you like the information and the knowledge that I shared with you today, there's tons more of it involved in this 3-hour video. So I look forward, and hopefully all of you can join us. Now, I'm going to go to the question and answer portion here. So if you bear with me, I'm going to try and look at some of these questions and see if I can get to them. I'll try and move back a little bit. And I'll go to roughly about 5 o'clock here. Let's see. Let's see, I'm looking here. So far, I don't think anyone has asked questions. Pretty much just people talking with each other. As I scroll through, okay, I see a question here from CM. QQQ says, slide, you have a buy on the 717 bar. Can you explain that, please? Well, I don't, I'm not exactly sure where that bar is, or that slide, because I'll probably have to backtrack a lot before we find it. All I know is that on the QQQs, if you were looking for a buy, I believe you may have been talking about the, I'm not sure if you're talking about strategy #1 buy or the actual examples we were giving for the pullback technique. But if it was referring to the strategy #1, which is involved in the course, the $37 deal, I can't give you all the information because then I'd be giving away the rules. It's just a pullback technique, and it has to meet certain requirements. And if it was a buy, it just simply came to the level of where the strategy said it should be purchased. So once again, I believe you were looking at the strategy number 1 slide, and I just can't give out that information, okay? Because it wouldn't be fair to the people that are probably spending $37 right now. Let's see here. Let me go back to the question and answers. I believe, I'm not sure if this is being recorded. I think some people were asking. You would have to contact Steve or Becky. Let's see here. I have to go a little bit forward because a lot of people are talking and concerned with other things while I was speaking, so I just want to make sure. Okay, here's a couple of questions. What do you mean by the top 25%? This is probably one of the most commonly asked questions. Just imagine a bar, okay, whatever you're looking at. It doesn't have to be an open, high, low, closed bar. It could be a candlestick bar. When we say the high and low, we're not talking about the open and close. We're talking about the high of the day. If we're looking at a daily bar, the high of the day and the low of the day. All right, let's just say the high of the day is 54. Let's just say the low of the day is 50. All right, so what is the range? The range is 4 points. All right, so what we do is we divide that by 4 separate but equal divisions. All right, now the top quarter would be from 53 to 54. So we want to see that we close in that top quarter, anywhere from 53 to 54. All right, that's how it is. If we were going short, well, we want to see price close in the bottom quarter. So if we have 50 as a low and 54 as the high, we divide it by 4, 4 points divided by 4, and the bottom quarter would be 50 to 51. Okay, so if we saw price close anywhere between 50, the very extreme low, and 51, that's where we have a setup. Doesn't mean we're going to go short. It means we have to trade below that in order to go short. Okay, that's all it is. But I think where most people get confused is that they think that this is a strategy, and they go, okay, well, where do I place my stop? Where do I exit? This is just a setup for a nice pullback technique. All right. As I can see right here, there's another question. Where do you set the stop loss? Once again, you can only place stop losses or exits if you have a full-fledged strategy. Those are pieces of the puzzle. I just shared with you educational information for constructing some type of pullback technique. Okay. Sidram was asking, how do you determine where the 50-period simple moving average goes? Well, all we do is just whatever chart you're looking at. I think a lot of people get confused because they apply a higher time frame to find out what to do on a lower time frame. If I'm looking at a 5-minute chart, I just want to plot a 50-period off of that, based off of that 5-minute chart. If I'm looking at a weekly chart, I just want to plot a 50-period moving average based off of that weekly chart. That's it. So we're not in any way using another time frame. We want to keep things simple. Now, I'm not saying that that's wrong to do that, to take the higher time to tell you what to do in a lower time frame. It's just that that's not part of this scenario, and we don't really apply that. We have nothing against that. We know a lot of our traders swear by using that technique, but we simply want to keep things as simple as possible. So whatever chart you're looking at, if it's a 1-minute chart or a weekly chart, just plot, go to your charting software and plot a 50-period moving average. A simple simple moving average, okay? That's it. Now, a lot of people are asking about stop placements. Like I said, it doesn't matter, once again, we teach you where to place stops. We have upwards of 7 different stop placements in our course, okay? We also don't care if you use candlesticks. These strategies that we teach and trade don't rely on candlesticks, but you can use them. There's nothing wrong with it. They're in no way determined off of a particular type of candlestick formation. Although we do have one forex strategy that applies that, but other than that, you can use candlesticks if you like. In fact, I use candlesticks all the time. I was trading the E-mini today, a different strategy, using candlesticks. So it does not matter which type of bar you're looking at. I know a lot of people get confused when they're just used to candlesticks. You can apply candlesticks with all of our strategies. Let me see here. The high and low, let's see, the high and low are the same as candlesticks. Yes, the box of the candlestick would be the open bump on the sticks, left side, and the closed bump on the sticks on the right side. Right. In other words, that's where people get confused, and that's what I mean by overcomplicating your trading. Just look at the high and the very low. A tick, someone asked what a tick is. A tick is just a unit of measurement. In other words, if you're looking at a stock, and once again, the last sale is 50, all right? If you go up 1 penny or 1 cent, the next tick on the trade would be 50.01. That's a tick. 50.02 would be up 2 ticks, okay, and so on, all right? A pip on a currency pair is similar to 1 tick. But as traders, you need to know what a tick is. You can't simply go into trading without knowing that, because you need to know where you're going to be entering and exiting, and this is based off of tick price. It's not complicated in any way, but if you're going to be entering 1 to 5 ticks above, you need to understand that it's just a unit of measurement, all right? If you're trading a stock, it's just a penny. If you're trading the E-mini futures, a unit of measurement is 25 cents. That's 1 tick, okay? Yes, as David says, the smallest price movement of whatever instrument being traded, 25 cents in E-mini, for example. Arcada asks what the 25% rule is. I just went over that. I'm pretty sure I just went over that a few minutes ago, so I'm pretty sure you got that already. Let's see. A lot of people were asking me to slow down. Unfortunately, we only have a limited time. In fact, I only have about 5 more minutes, and that's why I wanted to leave time for your questions. But once again, I believe this may be recorded. You can watch this at your own leisure and take your time and watch this. But I have close to 150 slides here, and there's no way I could present them all if I took as much time as I wanted. I have so much to say, and I just want to make sure that you got it all. Let's see here. Remember, a lot of people are saying, I wish you just used the CS, or I wish you just used currency pairs, or just remember these it does not matter what chart you're looking at. If I showed a chart in stocks and you only trade a commodity or a currency pair, it doesn't matter. Just erase whatever it is from your mind. This concept works in all markets and in all time frames. All right. Let me go down here. Some more questions. Tim asks, so what if the trade goes against you? Where do you exit? Well, that's in the course. Once again, that great consistency we have in strategy number 1. We also give you the stop placement. We also tell you where to move your stop to unchanged if you want to use certain conservative rules. So this is all in the course. And trust me, $37, if you can't afford $37, I don't think you should be trading, because that's a very inexpensive price for so much information. The people that came to see me in Denver paid hundreds of dollars, so it's much more inexpensive than the actual seminar was. So it's a lot of great information. Let's see. Yes, Rick says, I've lost quite a bit trying to catch the falling knife. Yes, this is one of the reasons why we always use the confirmation technique. So many traders try and buy at the bottom, and then they'll try and sell at the top, and that will work every once in a while until it doesn't work. And then guess what? You catch that falling knife, or you stand in front of that speeding train, and you give everything back. Trust me, I know from personal experience, because this is the way I used to trade. I would have even great months, maybe 3 or 4 great months of thinking I was on track, and then I'd have 1 month where I gave everything back, everything. And so I'd be right back to zero again. So there's really no consistency in that type of trading. What we're trying to instill in all of our members is consistency. And the way you do that is by 1, being in sync with the market, and then 2, listening to the market by using those top 25% and lower 25%. And then lastly, using that confirmation technique. Now, even if there's just one thing you want to use, try that confirmation technique, okay? Let's say you have a strategy that works well. Fine. But instead of buying at the market or placing a limit order, just apply the confirmation technique. Once you get a strategy signal, I don't care if it's based off of my tools, or if it's based off of Steve Bigelow's, or if it's based off the sunspots. It doesn't matter. Try only buying if you trade above the previous bar's high. All right? And I can almost guarantee you'll have a higher percentage of winning trades. Okay, just a few more questions before we have to sign off here. Let's see, more people asking about stops. Jitu says, oh yeah, this would have helped me save me a fortune. Yes, see, that's one of the things also. is that these techniques, even though they may not generate gains all the time, sometimes the trades you don't get into are the best trades that you've never taken because they save you a ton. All right. So what's great about these techniques is that they'll get you on the right side so that maybe you don't even enter into the trade, but at least you didn't lose anything. Where so many times you're into something. In fact, I knew a trader today who was getting killed today because he was trying to short the market, and I said, well, what time frame are you looking at? And when he told me, I noticed that the price was above the 50, and I said, well, if we're above the 50 in that particular time frame, you should not be shorting. So that's why. I mean, if you just use that simple rule, you would not have taken this huge loss you're taking today because the market just kept going higher and higher up until the end of the day. Herb is asking, are you using futures only? No. Once again, Herb, this works on anything. I showed you stock examples. I showed you future examples. I also showed you currency pair examples as well as commodity examples, ETFs. So it works virtually on anything, okay? Let's see. Yes, everyone knows what the 50-period simple moving average. Google it. It's just basically it takes the last 50 bars and it creates an average. It's very simple, and just place that on whatever time frame you're looking at. Okay. Abe was saying Netflix lost so many subscribers. So that's, you know, once again, we're not concerned with that. That's good to know because you know, after the fact. But remember, we were getting sell signals in Netflix before this even happened. So that's the beauty of these strategies and these techniques, because we're listening to the market. Okay? Okay. ME Clone is asking, what is the accuracy of your system? Once again, this is not a system. Okay? Remember we said in order to be a system or a strategy, you have to have specific entry, stop loss, you know, and you have to trade the same way each and every time. Strategies are different in that we give you a little bit of room of allotment. You want to trade assertively, you want to trade aggressively, and so there are a million and one ways to trade these. And so if you have so many time frames and so many ways in which to trade, well, then there's actually no way in which to actually, you know, formalize any type of system or any type of numbers for that. So strategies are not like systems and where they can be tracked and recorded. Trust me. Do a Google search on specialist trading and on all the testimonials we have from actual members and traders who've used our techniques, and you'll see how well these techniques hold up, okay? Just a few more minutes here before we have to sign off. Let's see. Someone's asking, how can you get it? Well, it's only $37 if that's what you're asking about, Christina, and it's right there in front of you. So here's the link. Underneath the phone number 310-598-6677, you can call up and speak to any one of the trading consultants, or you can just copy and paste this link right here to your browser, and it'll immediately take you to the page where you can just simply purchase it and get that $37 deal. Okay. Just a few more questions. I think we're almost done. I'm, you know, even though I know a lot of you were hoping I would go slower, I'm glad I didn't because it gave me to answer your questions. Let's see here. Someone's asking if I can check BBRY on a daily chart. Unfortunately, this is a static presentation. It's just a PowerPoint, so I don't have access to real charts. I'm sorry, but go ahead and look at, I'll study these 3 techniques I just shared with you and go ahead and apply them. Does the package also include sell info? Yes. Strategy number 1, I showed you some information there. The strategy works buying and selling, and all of my techniques work in any direction and in any market. Okay? So you don't have to worry if it's only for going long or going short. It covers everything. Also, any time frame. Okay? Let me see. One last question here. Are you using the 50-period simple moving average any time frame, even Forex or even stock, and even can I use to trade options? Yes. We apply the 50 to virtually everything. Okay? That's all we really use. That's the only moving average we really apply, just a 50-period moving average. Okay? And remember, if you're an option trader, all you have to simply do, even though we're not an option course, you can simply just transfer these signals onto an option. So in other words, if you're trading a daily bar and you get a signal, a setup to go short using strategy number 1 or any of the techniques I shared, instead of just going short or buying whatever the signal is, simply buy you know, a put or buy a call, a long call. It doesn't matter. You can just transfer it on. A lot of our traders actually, what they like to do is they like to go to weekly charts look for the weekly signals because there's a larger move because of the larger time frame, and then they apply an option, either go along the calls or along the puts, okay? I'll take time for one last question here. Remember, one last thing I want you to remember, if you're curious about this technique, go to a weekly time frame of the E-mini, okay, going back for a year, a weekly bar of the E-mini, all right? If you notice, the last 2 weeks, this week was what in particular, it looks like it's closing in the top 25%. That is the pullback formation we talked and shared with you and taught you today. So let's see if we close in the top 25%. Remember, this depends on where we close tomorrow. But if we close in that top 25%, well, then we're going to be going along the next week if we just trade 1 to 5 ticks above. That's it. So this would tell you that the market's going higher. It doesn't mean you have to go long the E-mini on a weekly time frame, but it just means that you could apply it to your trading. If you're long, well, that gives you a little bit more confidence. If you're short, well, you may want to tighten your stop or look to go long or look to cover. Or if you're thinking about purchasing a particular stock or option, this would give you the confidence to do it, okay? Okay, in closing, once again, here's the information. You can go to our sister site, protraderstrategies.com. Email any one of our trading consultants at trading@protraderstrategies.com, or you can call us directly, area code 310-598-6677. And as you see here, if you want to take advantage of that really deep discounted offer, $37, simply cut and paste the link at the very bottom you see there, and paste it onto your browser, and that'll automatically take you onto that link, and you can see the video, the 3-hour video. It's yours to keep with the full strategy, all the rules. A lot of people are asking for exits, and a lot of people are asking for stop placement. It's all in there, and you can be watching that in the next 10-15 minutes, okay? So I want to thank you all for attending today. Thank you for taking time out of your evening. I also want to thank Steve Bigelow and Becky for inviting me here to speak today, and thank you for just listening, and I look forward to all of you becoming members of Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.